The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Folks, Basil Chapman, Tiger Technicians Hour, the Friday edition, Friday, August the 17th. And let's go straight to it. And thank you, Steve and Darrell. Great shows, as always. Just before mine, 9 o'clock till 11 o'clock, you got Steve Rhodes, and then Steve Rhodes with Tom today. He was on with, not with Tom, but with Darrell. And Darrell Martin, very, very good show. And, of course, I'm followed on Friday by Nico DeHaan. That's your health. Yep, every time we get to lunchtime and Nico's on, I'm saying, oops. But I do my best. I really do my best. And then, of course, we've got shows all day. You got, so we've got Dave White, you got Ken Shreve, and then Tom O'Brien, show 4 o'clock till 6. So, well, let's get to the nitty-gritties. The Dow is up 3 at 13,235. Let me just go through let me just read the list so that I know I'm going to get through it. I had questions and stuff, and so today's Friday. From my webinar I did on Wednesday night, I discussed a peak G. I've got another PG. We'll get to that. Roller coasters. I'm not sure I'll get to that. I want to show the charts of NetEase. Let's see. Red Sox. What? Oh, the Red Sox. Remember last summer I said everything that I look at in my market, I've done this since I must have been 4 or 5 years old. I've looked at trends. I identify trends very early. I just, everybody has a little something that a little gift. That's the gift I have. I can see trends very early. And I had said that if everything I'm reading, I'm embarrassed to say that I once lived right near I lived on Marlborough Street in the Back Bay, just real close to the Red Sox at Fenway Park. I never went. Maybe I went once. And all the years I've gone maybe once or twice, maybe 3 times altogether. I'm not a fair weather friend or anything. I like playing sport. I like watching it when I get a chance, but I mostly like playing. But I'd say that last summer that I believe that in everything that I do and everything that I assess, it's got nothing to do. I don't even know who the players are, maybe 1 or 2, but mostly I don't know who the players are. Everything I'm looking at says that the Red Sox could be making in the ChapmanWave a peak F top. And all that states very clearly is that it's a top of significance. It's a top financially, and it's a top emotionally, and it could be in terms of scores. I don't even know how they're doing up until now, but it could be in the games. And one of the reasons is there was just this plethora of activity in the Boston Globe and other papers, just writing every page. It's something about one of the Boston, about one of the Red Sox players, about the managers, about just it went on and on and on, and they spent so much money, and the new boxes and they converted just the stands. They did a whole bunch of stuff. I just said to myself, everything I'm looking at says that this has to be some kind of a peak. So we'll be watching that. Yeah, there's no trade in this. This is just something that I'd swing. Oh, there you are. Z in the den says, well, Basil, in spring of 85, I lived in Marlborough Street in Back Bay. Well, this was a lot longer before that. So that was it. So I spoke about that. I want to get to the XLF. I want to get to a number of other things. Oh, and I wanted to show peak Ds. How in the ChapmanWave, the peak D can be so important. And that's why I wanted to look at NetEase over a monthly. So let's just go straight to the market. IND. Oh, and I want to look at Apple, which had a round number low before it had this very big run-up. And we're going to talk about that as well. In my Dow chart, in the daily, there's a chance that it might have recycled. At this particular point, I'm calling this leg F/B. I could even go. I could even call it C. That gets it further along. But in the meantime, that's not the issue. We've made a new recovery high at 13,274. Still have not hit 13,338, but we are getting closer to that trend line that I said before when we were looking at trend lines. Do I have time? I do have time. I'm making time today. When we go back and we look at what my subscribers get every single day, my opening call, I show these 5 charts within the one frame, and I discuss them all. This is a 120-minute chart, which has probably made a leg F to the upside at 13,274 today. And it should, if it's going to pull back, it'll pull back into the 13,200, 13,150 area. That's going to be key support. And that's near term. The volatility index is pulling back. It's at 14.15, having made 13.67 on the 120-minute chart. It broke to the upside, and now it's coming back in that H pattern, the lowercase h pattern. So we've got to watch this real closely, because my 3 bears, Vixie, Bondi, and Dolly, are going to be really key over the next, I'd say, 2 to 5 sessions coming up next week. So the trend index is still just neutral at 1. Now, this shows the chart I'm talking about a little clearer. This chart of the Dow, the daily chart, shows the resistance level, the lower resistance level. And that lower resistance level says that until the Dow decisively breaks into the 13,350s, I'd even say the 13,370s and higher, and closes there very strongly, we've got to consider that we are getting into a little toppy area. Got to watch it closely. In these S&P, the S&P, did it make a new high today? 1417.44, 1417.73. Yes, by a few cents. This extends leg F/B. So you've got them both parallel in the Dow and the S&P. Now I'm going to move quite quickly along to the parameters. I spoke about the upside. The downside, 13,176 is the key support in the 9-period exponential moving average of the Dow. A close below, I would say a close below 13,120 over the, no, 13,090. I'm giving it a lot of room. A close below that says we have begun the consolidation, high-level consolidation at first, unless we smash through that. So far, the stochastics at 91%, the MACD is good. Everything looks very, very positive, and that's when you've got to be a little careful, because it's when everything looks good that you got a smack on the back of the head. No, seriously, that's when you got to be careful. In the S&P, the 1404 level is the 9-period exponential moving average. 1415.32 was the previous high. And today we've gone to 1417.73, so we are above it. The left side, right side price time match is extended some. I didn't change it in both the Dow and the S&P. I want to see something else that happens. There's another particular technique I've been working on. So I won't discuss that technique because it's in progress. But the technique basically will say that if the price continues above the previous high quite decisively, you've raised the base considerably. And we'll talk about that in relation to bonds, etc. in a moment. Now, the previous highs are the 1422s back in, that was in April, the week of April the 6th. In the S&P says fine, C1, C2, pull back sharply. Now we've made, I'm calling this leg D, just to be safe, if it goes above 1422.38 in the next few days. If it does that, I'm calling it leg D, just to be conservative, and say, okay, what's next? Meantime, back at the ranch, I have to show this chart because it is so important. And that chart says, there it is. This is the monthly. Now, of course, the monthly isn't even halfway through. It's halfway through. But look at this chart. I've shown it just a few times. I show it to my subscribers, but I want to show it to you here. Do you see that up channel, and I even drew a secondary inside track support level, which is at, in the monthly chart, it's a moving target, obviously, because it's a rising price, will be 1346. A close below 1346, and the Dow's at 1415 right now. Anytime in the next 6 weeks, says, be really careful. But a new high above 1422.38 says, not only could this be leg F, it could be F/B. Now, I drew this chart for subscribers about a year ago, I think it was. And I said, I'm embarrassed to even show it to you because We were at that point, I think we were very much lower. And it said it's impossible. But I said, if there's a left side, right side price time match, the first level will be October of 2012 to get to the 1576 level. But there's another chart that I showed with a white background, and that says, to be a little conservative, there is a possibility that if this replicates that 1932 to 1937 chart of the Dow, when the news was so bad, but that was a real depression, nothing like this. This is just a bad recession. Now, if you're looking at just stock prices, I'm talking about lives and livelihoods, I'm just talking about stock prices. Then perhaps with all the bad news, we will continue to go up into March of next year. That would be the test of the 1576 level. So my parameters are really clear. Decisive close above 1422.38. I've got a new leg to the upside in the monthly chart. It's basically so far raising the base, and that base says that 1346 area will be absolutely critical, and needless to say, a break underneath it would start to target the upside inside track channel between the green and the red lines. Okay, enough of that. Now, I want to go straight to the various, I'm just going to run through the prices. The Dow is up 3, S&P is unchanged, the comp index is unchanged at 33,062. Gold, if I can find it over here, gold is down 11 at 1608. High-grade copper is down at 10. I want to look at high-grade copper. I had a request in the den, as well as the fact that I focused on, for my subscribers this morning, I was talking about a particular copper stock. Silver is down 11 cents at 28.10. Crude oil is at this particular point about unshit 95.61 on the continuous contract. It's bonds that are up 6.30 seconds at 145 and 25.30 seconds on the continuous contract. I'm just going to go a little further here. I'm going to do this. There's a left side, right side, a potential price time match. Let me do this. It was in, I don't know if I should do it. I'm going to do that right now because we'll have callers on the line and I want to get to whatever I can beforehand. Okay, here we go. The Q is August. Oh, that's no good. Q. So what would be the next contract? U in the crude oil? All right. If we go to the crude oil September contract, it's in leg E to the upside, just above the 200-period exponential moving average, leg C in the weekly chart. Now, this is all very important because if there is further gains to be made in crude oil, I need to also look at copper and say, wait a minute, crude oil is a good sign of, what can I say, economic activity. But high-grade copper is also very important, and at this particular point, there's a dreaded H, a lowercase h formation in the weekly chart. Now you have the different the contango. Let me see if I can look at the different monthly contracts of crude oil, and then I'll try to relate that to copper, and we'll take calls. I'll be back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Of course, we're all about callers, so I'm going to set aside those things that I want to look at for now. Want to take our first call. We've got Michael in New York City. Hi, Michael. How are you?
Good. How you doing, Basil?
Very well, thank you. You'd like to look at?
Ariad Pharmaceuticals, based in Cambridge, Massachusetts.
Yeah, you just want to rub it in, because this is a stock that I looked at and went in the 9s and 8s that I wanted, and now it's at $19.63. Ah! Yep. Well, that's the way it goes. So the question is?
No, I'm long. I'm long this stock.
Okay, good.
The question is, what do I do now? How do I protect the gain? And
okay, that's a really good question. I'm going to explain. Let me explain what I'm looking at, folks. We have the chart in front of us for you. For those of you who are looking at Tiger TV. Oh, I didn't need to put that on. I haven't. I usually like to look at it on my cell phone as well, so that I can see exactly where the image is sitting, and I can get the same. I'll do that next time. So what we're looking at here, I have. A, B, C, D. Yes. I have a count that is, let me just make a change here. I had an alternate wave count. Let me just put it into the account that there are. Okay. So I'm going to do this. This is the weekly chart. I'm going to start off with the weekly chart because it's the most fascinating for those of you who are students of the ChapmanWave, and for those of you who I have begun over the years to start using at least some of the little techniques that I talk about, like the 9-period exponential moving average, etc. This is literally walk the 9-period exponential moving average the whole of the year 2000 with just 2 breaks to the downside in the weekly chart. That is incredible. This is the 8th month, and this has just been going on and on and on. Now, look, this is the way I would consider, because you've got a longer term perspective. And because I have an alternate count in my monthly chart, which says it could be, just like I had in the weekly chart, which resolved to a leg D, and the MACD is still very strong, stochastic still very strong. So the monthly chart is very strong, but the 9-period moving average is down at 16.37. ARIA, A-R-I-A, Ariad Pharmaceuticals, trading at $9.63, down 21 cents today, is the monthly chart has a 3-point difference between where it is now and the actual support that would break the longer-term trend. And that longer-term trend, I still would think that unless it collapses, it's going to break under it and then bounce back above it at least one more time. So the monthly chart is still very positive. Now, this is the way I would look at this chart. I would try to keep a core, and it's fascinating. I met someone who does other things, but he's also he studies biotech stocks. That's just a hobby of his. And he told me about this, which had always been on my list, and he said he loves it. That was back in the 8s and 9s. And I watched it a little bit, and then we tried to get it. I can't remember if we had it for a little bit. We got stopped down, but we never got back in because it's just been so steadily climbing up. That weekly chart, the monthly chart says, don't do anything yet. Okay? Now the weekly chart says, but to protect your gains, the 18.42 level is the 9-period exponential moving average, and I would suggest, now this might be hard to do, and it might even cost you quite a bit. I would say you have to wait for the full weekly candle to close. Not if it goes underneath 18.42, but it has to close under 1842. And I'd even recommend that you wait a little bit the following week to be making anything other than what I'm going to recommend on the daily, a shorter term action or reaction. Why? Because it's been so steady that they've managed both their price movement as well as their releases of information. You know how biotechs do it. You can look at a biotech stock, and if you see 3 monthly scoops to the upside and a pullback, you know that they release their whatever it is, their potential for this fantastic drug, which is not even close to FDA approval, and it spikes up on news and then comes back on reality. This one seems to be having the best of both worlds, but it's handling whatever it is doing, biotech and drugs, and handling the news. And it looks like they don't push the news very much at all from the weekly chart. So I love that aspect. It says this could almost turn into, even if it has a big pullback at some point, this particular company could really have great respect in the field just from the chart that's showing right now if they continue to do what they're doing. So here we are. I've said not to do anything yet. Now we get to the shorter term because it's leg D in the weekly, alternate wave G or C in the monthly with no real clue because all the technicals are so strong. The daily made a peak E. I shouldn't have put it down an arrow. It should have been a plus sign. Had a peak E at 1972 the other day, pulled back quite sharply, and has run right back up past the level that it was at. I'll talk about what I would do on the shorter term in a moment. We'll be back with Michael in New York City looking at ARIA, fabulous stock, and we'll talk about it a little more when I get back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 11, S&P's up 0.38, and we're on with Mike in New York City. We're looking at Aria. This is Ariad Pharmaceuticals. I said it's a fabulous-looking chart. Still looking really good. I haven't got a sign yet that the monthly chart is about to pull back on the technicals. The weekly chart is still very strong. The candle today after the doji and the 20.07 high, 20.05 high, that is, the week of the 15th, says be careful because 19.43 is the 9-period exponential moving average. So this is the way I would look at it, Michael. Your core position, I would keep as a core position. If you're asking my opinion about what I would consider right at this particular time, I would say that taking a little bit off, this has got nothing to do with using the 9-period moving average or anything else. It's what it has to do with is that the body of candles from the high of the 31st of July 1972 down to the low of 1790 tells me that the candle of the 1st of August, with a high of 1974 and a low of 1852, basically call it an inside candle. The body of that candle is vulnerable to being tested. Now, over a point, is it really worth taking out your money when you have to maybe struggle to put it back in. That's why I'm saying I do believe that it's money management says it's made a really good move, just a little bit, almost like a reward that you want to give yourself for being patient and sitting it through, even through that big pullback that it had in terms of this stock. It was a big pullback, but the history of it is that as long as the 200 period moving average, where did it go? It's so far down in the weekly chart, we have to look at other moving averages, and 1733 is the 20-period moving average in the weekly. I would prefer for you to possibly, and you can think about this, no, you don't even have to do it today, is maybe just take a little bit off, and that little bit could be put in with a buy order at, say, 18.71 to 18.46. And you might say, hey, over a point, why am I wasting my time? The reason why is because if in the next 3 to 4 sessions it starts to take out 19.30 to 19, then it could take time and a little bit of price, and then I've got a peak D in the weekly chart, and we'll have to watch to see whether the stochastic, which is at 87%, is starting to slide under 80%, and that's a warning that it could go into a longer sideways consolidation. So you can see what I'm trying to do here is both money management, I'm trying to handle the trade, and I would also say to you, another way to do it is even that little bit that I mentioned to take off, you could say, you know what, if it takes out the low of today of 1956, or 1947 is a 9-period exponential moving average, then I'm going to take a little bit off. But that core position at this particular point, I would hold it. Great trade, and not a trade, a great position play, and it's just a matter of handling it because it has a very extended move to the upside in the monthly chart. But if you look at the weekly says, don't get concerned, I'm walking the 9-period exponential moving average, and that's really the most important thing. So answer is you could do nothing, you could take a little bit, or you could take a little bit off right now, or you could take a little bit off if it takes out today's low or the 19.44 9-period exponential moving average. And then you've got to expect if it closes under 19.20, it's going to go into a little bit of a consolidation. You might even get a weekly peak D as it consolidates. Hope that helps you.
Yes, great. Thank you for your help.
Thank you, and congratulations. That was a great trade. It's the one I wish I had. I wonder if I can find it here where we had it. Way back. 1 quarter long at $10.89. And we made a little tiny bit of money, but that wasn't the best. I should have just held it. Okay. Now let's go to things. I had a number of questions in the den. We'll go through them one by one. Where did I type in what I'm going to look at? Typed it in right. Okay. First of all, the question was on high-grade copper. High-grade copper is, to my eye, and to my experience in this, high-grade copper is going to be very important. Why? Because if high-grade copper makes this double or triple, quadruple bottom in the 3.29 area, I'm looking at the continuous contract in the weekly chart, and at any point next week, it doesn't even have to close, but at any point, if it takes out 3.4415, the high of the week of August the 10th, that is really good action. It says, yes, it could be in a trading range, but at least now you've got an attempt to get away from the bottom and to try for the $3.53 200-period exponential moving average, which is like a magnet here. I don't want it to become a repellent. It'll become a repellent if next week by Wednesday it breaks and closes under any day underneath 3.29. So this is very important because the monthly chart has that pattern I talk about. It's that right shoulder failure, that dreaded H. And that says that the MACD is very poor, but the stochastic is trying its very best to find some support, at least for a bounce. And then once again, the 3.5s is where any strong bounce could take it, and then we'd have to reassess. But what that would do is it would say that the rally in the stock market, in fact, could go a little longer. So now we're going to do the other things that I discussed, which is natural gas. Now this is NG. I'm going to the Z contract. I can't remember if I notated that. No, I know I did September. NG U. There we go. And natural gas made a peak E-top in the daily chart. This is a September contract with a doji at $3.277. So that 27 move was the doji candle the next day didn't close below it, it went below it, but the following day, the second day, plunged underneath the 200-period moving average, went all the way down, and once again, you're looking at support, just like the copper has that left side support. Here we have the left side support of 2.706. Back on the 11th of July, 2.685 is where it went to yesterday, but it closed above it and again today. So if natural gas, and at this point it appears that it wants to go lower, closes anytime by, say, Tuesday afternoon, Wednesday morning, underneath 2.68, 2.7 was the low, underneath 2.68, it says be careful, because you could start to see, oh my goodness, a left side, right side price time match, and that would take it to the next cluster low. And at this particular point, I have to use which candle? I have to use peak D. Okay, I'm just doing a left side, right side price time match based on the ChapmanWave methodology. And that's going to take you to, I can't move it to the right enough. There you go. Okay, very good. And that takes you to, that's the one. Now we get a parallel. There you go. Okay, and that takes you to about the 28th. It takes you to the end of August, almost the beginning of September, and it says be careful, because if there's a close below that, you could go all the way down to the 2.533 low of the 18th of June. What would change that? What would change that is by midweek next week, natural gas is over 2.85. 2.81 is the 9-period moving average, not good enough. It really has to get to about the 2.85. It has to break all this resistance that we've had for the last week at the 2.848 area. So you need 2.85. So that's natural gas on the daily. The weekly chart says it's got the series of peak A, B, C, and then it comes back down. It's under the 200, under the 9-period exponential moving average, but the MACD is still good and the stochastic's not. That gives the weight, the benefit of the doubt to the positive support side, and says once again that 2.65, 2.68, if it touches that, it has to spring right back and get to the 2.75 area. So the monthly chart is just horrible on natural gas. We have to look at the shorter time frames. And if I go to the natural gas, I wonder if I've lost that chart as well. Natural gas, I lost that chart. All right, natural gas, very long term. The chart once was back in 2005, it hit 28.74. I don't know how much I can squash it. Oh, my goodness. Yeah, that whole 2.28 area has been resistance, and this chart goes back to about 1990. All right, so that's natural gas. Next thing I want you to do was the euro, EURUSD. And the euro has, in fact, monthly chart says it's still really struggling. Remember I spoke about this Roman candle, ChapmanWave Roman candle? That's this candle, the candle of last month. It says that at any point, it's almost done it. But if, let me see the price. 1.21, at any point in the next, I'd say by midweek next week, well, let's just say by next week, if the euro breaks under 1.21, it's starting to hit the wick, the critical mass, the critical part of the wick of last month, and then you can see a quick run down to 1.204. So that says, all right, that's fine. What would save the euro? Because why? Because if the market has more legs to the upside, I'm going to explain that in a minute, and if the bonds if bonds based on the TBT, which is in leg C, probably making peak C today, still has to go to D next week, and the price target on the downside of the TLT at 119, I think at 119.70s is still not hit. It says there's still enough room to go up. That says that the euro should benefit. The euro needs to decisively take out not today's high, although it's right on a trend line. It needs to close above 1.238. That's the high it was on the 18th of August. If it can close, really 1.29, 1.2, that was wrong, 1.2 That's what I meant. 1.24. If it can break and close above 1.24, that is really nice action. It says it might be a slow struggle, but you could very well make a leg C above the 1.244 high of the 7th of August. So it breaks down. If at any time midweek, next week, it closes on a 1.23, especially the 1.224 low of the 10th of August. If it does that, that's a real problem. But in the meantime, it's holding kind of quite well. The weekly chart is the big issue. The weekly chart says the technicals are improving, but it hasn't been able to close above 1.238. That's the 9-period exponential moving average. It hasn't closed above this since the week of the 27th of April at 1.326. So this is a very critical period. For the euro to be able to find the kind of strength to be able to break higher, it has to happen real soon, because there are a lot of channels and expanded wedges and all sorts of things. The MACD still okay in the daily. MACD in the weekly is trying to cross positive. Hasn't yet, but if it does cross positive, that could give another little bit of burst to the euro on the weekly, because the monthly is just horrible. Just visually, the monthly says at some point it has to test 1.875. It's just real simple. And that's just visually what it says. So we need a lot of technical underpinnings here to be able to push it higher. The next thing was HCA. I think it was HCA because that's a stock that in my opening call we've been looking at, wanted it as a short at one particular point and then as a long, and now I don't know. Okay, so now HCA Holdings. Is this the correct chart? Was that HCA you want to look at? Let me just double check. Looking over there. Yeah, it is. Okay, no, it's not HCA that I was looking at for my own work. It was, let me just double check. Where's the H? I lost it. It was there. It was a healthcare, so maybe it's a different HCA. All right, I've not done the notation on this. HCA is HCA Holdings. Anybody in the den able to tell me quickly what it is? Peak C on the daily, not peak B. Oh, sorry, that was the euro. EUR USD. Let me just do this because, yeah, peak C on the daily in the euro. I believe that's what we were talking about. Yeah, correct. Okay. I hope that's what we were talking healthcare. No, it is HCA. HCA is healthcare. Good. All right, here we go. The daily chart has made a peak C and failed. I'm always a little nervous when there's a history of making peak C, A, B. This is an A and a B, and it failed. So, folks, the symbol is HCA. It's at 28.83. It's up 72 cents. On the daily chart, and just do this A, B, C minus. Then it does another A, B, C. And so far, that's a very good one. And I can actually put in, I can put an up arrow in because the MACD is stochastic. This looks very strong. So that's the daily. Daily is very strong. If you're in it, I would say just watch out. It's at 28.83. If by Wednesday of next week it's pulled back and it's under 27.50, it's starting to fail. But most importantly, if this thing goes to 29, anywhere in the 29.20s, that it not only extends this leg, it says leg D still to come, and that should be even higher. The weekly chart is in A, B, I have to double check, 22.35, good. 30.37, that is a C, good. C, D, E. I like this chart very much. So HCA is looking good. The weekly chart made a peak E. It's pulled back. When it undercut that, this is actually a brand new leg up, and it's an IPO, I guess. Yeah, it's an IPO, and that's in leg D, a peak D in the monthly. I'll wrap this up as soon as we get back, and then there's some stuff I want to talk about for next week, because I will be away. I'll be doing my opening call, but I will be away.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman. So we're looking at HCA for one of our dinners, folks in the den. And so the question really is, I'm not sure whether you're long or whatever it is, but most importantly, I like this chart. I think this chart is looking very good, and it's acting very well right now. And what I want is, I want stocks that are participating in the direction of the market that's going in. It's going in now. Market's moving higher. This is moving higher, and it's moving higher very nicely. So the question now will be, that would be, does it go to leg D? And I suspect it will. The very big issue for, if this is the monthly chart, has gone from a low of 15.03 HCA holdings, and it's at 28.82. It made a high of 33.37 soon after its IPO back in June of 2011. 4 months later, it did that, and it plunged down to 15.03. So it hasn't even gotten to that high. So this is a very unusual chart. This is in the monthly, it's gone to peak D without breaking to a new all-time high. I suspect that if everything's going right with this company, it will make a new all-time high. This is what you put on your long-term outlook portfolio watch list, because I love the action. The big thing is going to have tremendous pressure around about the middle of that ugly bar on the 6th of July between $30.50 and $28.12. So somewhere in the middle there takes it to about $29.43, somewhere in the $29.30 to $29.70 area. That's where I expect it's going to have a pullback. That pullback, especially in the weekly chart, is going to be absolutely key, because in the next 3 weeks it must not break underneath 27.30. If it closes under 27.30, closes under there on a weekly basis, it says, okay, I need a little time out. But looking further out, if this stock holds very well in the 26.5 to 27.5 area on its next very big pullback, and then it starts to build upside pressure, that monthly chart says that could be very positive. I hope that helped you. Now let's go to what I wanted to do. There are a couple of things I want to look at. I'm not going to be able to do everything I wanted because I'm about to run out of time. Just in the ChapmanWave, it is so important if you want to learn about a technique. There was a stock that I looked at yesterday, NetEase. There was bad news on it. Look at this monthly chart from the time if you go back to the low around about 2001 at about 13 cents. There's 1, 2, 3, 4 decisive peak Ds and pullbacks after peak D. Really good exercise in any technique. This is the technique of the ChapmanWave, going to a peak D, and that's where you can expect. It doesn't have to happen at peak D, but at peak D you've got to watch out for the chance of a very strong reversal in time and price. Now in the webinar the other night we were looking at peak Gs. Here's a perfect peak G. NetEase goes to 65.54 on the 8th of June. Peak D, it makes a round number high at the high the very next day, and that's it. 64 and plop. Where is it now? At 48.35. So I want you to do that. I want you to talk about round numbers. Now let's go through the parameters, because I will not be here. I'm hoping that it's going to work out that I can do one day next week. I'm just deciding which day would be the best, but I will be doing my opening call. So everyone have a fantastic week. These are the parameters I'm looking at. In the Dow weekly chart, going above 13,338 will be very important. It could be F, but it could turn out to be a parallel peak C. Now let's look at it quickly in relation to the three bears. Bonds are pulling back. Bonds are now in a sell signal on the monthly chart. A sell mode in the daily, a sell signal in the weekly chart, and that says be careful, because I think a chunk of the price has been made, but the bonds could now hang out to the lower levels, and that makes the TLT 120 to 119 very important support on a closing basis. The dollar is pulling back. That allows the euro to move a little bit quicker. So the levels I'm watching for, if the Dow is able to close about 13,350, that's really positive. And on the downside, I think there's good support in the 13,110 to 12,950s.